y'all. Welcome to another episode of Beverages with Brie. Today's beverage, um, this is a little fun. We're going to, you get to see one of my first finished needle points. It is a needlepoint Corona. This is today's beverage of choice. And it's got a little sparkly there at the top. I don't know if you can see that. And you're going to start seeing them kind of sit up there on the shelf. I've got a little area where I'm going to put these, but this is one of the first things I needle pointed. It's a Corona. Sometime ask me about the Corona story. I've got one. So that's today's beverage. And it's needlepoint because I'm still at work. I'm not at home enjoying my Corona. I'm up here at the office. So maybe I'll have one when I get home. And any suggestions y'all have for different beverages for needlepoint or stitches, I'd love to hear them. Be cautious with, be nice with any critiques because I'm brand new to needlepoint. This is not what I normally do in embroidery, and it's very, very different. There was a steeper learning curve than I expected. So today we're going to talk about something you may have seen in the headlines. There's been a lot of headlines about it, and not a lot of people know about it, and it's the Trump accounts. And depending upon what you've read, you may have come away thinking they're either a college account or maybe a retirement account or possibly a government giveaway or something completely different. I've heard all these options. So today what I want to do is I want to separate the headlines from the actual planning underneath the Trump account. Because if you're a parent, a grandparent, or someone that wants to help build financial security for a child, there's really two big questions that we need to answer when it comes to these Trump accounts. The first one, does a child in your family qualify for the federal contribution? And second, if they do qualify, does putting additional money in a Trump account actually make sense for your family? Because those two things aren't necessarily the same answer. And it may not be the same, and it's not going to be the same situation. So it's going to be different for each and individual family. So first, let's talk about what a Trump account is. So first things first, what is a Trump account? Trump accounts are brand new. They're part of the IRS tax code, section 530A accounts. Yeah, I looked that up. And they're a new type of tax advantage savings account designed for kiddos. And so one important clarification out of the gate, they're not a college savings plan. They're not the 529 plan that we all have known and love. They're not Roth IRAs. From a tax standpoint, they actually operate more like a traditional IRA for a kiddo. So let me explain. Let me put that in English because now I'm using all tax codes and, logic there. So, and financial logic, which is not regular human logic. I know this, guys. So money that goes in the account, it can be invested. And while it remains in the account, it can grow without annual taxation. So no annual taxation on the money in the account. That part sounds like a traditional IRA, right? You put away money and it grows tax-free or tax-deferred, really. So that tax-deferred growth can be powerful over long periods of time, especially when we're talking about investing at a very young age for a very young child. And that's kind of what these Trump accounts are for. But when I spoke earlier, I missed them. Tax deferred, it doesn't equal tax free. They're two very different things. Tax deferred means that when the money eventually comes out, those withdrawals that come out of the account are taxed according to the rules that apply at the time of taxation. So distributions taken before 59 and a half can also be subject to additional IRS penalties unless an exemption applies. There are some exemptions. So this isn't simply a savings account where you can put money in when a child is born and hand it to them at 18 and tell them it's a tax-free pot of money. That's not it. The rules very much matter when it comes to this account. So I tend to think of them more as IRAs for children, traditional IRAs for children, not Roths. Okay, so then there's also the other thing making news right now is the $1,000 contribution. This is the big part that's making more of the news than any other part. Is there is a federal pilot program that under in its guidance, children born between the 1st of January of 2025, so last year, and children born before December 31st of 2028 may qualify for a one-time $1,000 federal contribution into a Trump account. So if you have a child or grandchild that was born after January 1st of last year or before December 31st of 2028, they may, notice I didn't say will, they may qualify for that federal contribution to a Trump account. And it's pretty straightforward when it comes to this. My viewpoint is pretty straightforward. We don't ignore free federal money. We just don't. No matter what you think about the account as a long-term saving strategy, get the free grant if it qualifies for you. Those are two separate thoughts. So, but the thing that I've learned in reading the material is the contribution isn't automatic. You have to claim it. You have to establish the account, you have to open the account, and you have to follow this IRS process, including filling out an IRS form. It doesn't look too terribly hard, but there is a process. So if you have a brand new baby or a grandbaby, this is worth something, add this to your checklist, something to think about. There's a bigger planning question. Once we get beyond this $1,000 contribution, this is when it becomes a more financial planning situation, because families have a lot of different ways to save for kids now. You may be using a 529. You may be using a custodial account. Maybe you're giving annual gifts. Maybe your biggest priority is funding your own retirement, building emergency reserves, paying down debt, and then helping with future education costs. Like, we all have stuff. And when you think about it all at one time, it can be really overwhelming. So I'm not going to look at a Trump account right away and go, this is exactly what we need. Everybody needs one. Like, for example, for Nate. Nate was not born between those time periods. He is a child. Do I think he needs a Trump account? Probably not. We are handling that type of savings a different way. So the question is, what job do I need this money to do for me in the future? If your primary goal is education, maybe we look at a 529 or a backdoor 529. There's a couple of different ways to do it. If the goal is giving your young adult flexibility earlier in life, we need to pay attention to the restrictions, because they can't touch this money until 59 and a half without a penalty. And if you're sacrificing your own retirement savings to make sure that you can aggressively fund education planning, that's a question too, because kids can get loans for education. We can't get loans for retirement. I feel like I say this all the time. We cannot get loans for retirement, but you can get loans for education. So we don't want to make your kids wealthy at the expense of making the parents financially insecure. Like, we want to make sure everyone's taken care of, right? And that's the big, big thing. We need to make sure everything works together in your overall plan. So overall, there is some genuinely interesting things about this account. And, this is time. So when money is invested for a kid over a long period of time, you could potentially have decades of compounding ahead. It's not that I don't love investing for children. I do. It's my favorite thing ever. There are some really extraordinary planning assets out there for children, and I'm not sure if this fits every case. So a relatively modest amount of money invested early can become meaningful just because of time growth. And accounts like these can create opportunities. We can use them to teach children about investing. This is something I'm working on with Nate right now. I'm working on compound growth and taxes and long-term decision making. He's opening his first Roth IRA this year because he's earned some income. Because really, financial wealth isn't just what you have right now. It's teaching next generations of your family how to manage money, because we aren't taught that So if there's a child or a grandchild in your family who may be eligible, here's how I'd approach it. First, figure out whether or not they qualify for that federal contribution. If they do, get the free federal money. Second, make sure if you do that, the account is properly established and that you understand what needs to be filed. Because the last thing you want to do is get in trouble with the IRS. Third, don't automatically assume future contributions need to go to that account. Look at the Trump account alongside other plans for education or savings that your kid may have. What are you saving for? When may the child need the money? What other accounts already exist? What are the tax consequences now and in the future? And most importantly, are your financial priorities being met before you worry about the financial probabilities of children? This is where overall financial planning becomes more important. This is what we've got to think about overall. I have had clients over the course of my career, my 20-year career, sacrifice their financial future, their retirement for kids' education, for kids' weddings, for kids, for lots of different things. And I will tell you, in the end, I think it kind of hurt them. So you have to look at it in overall, not just in a vacuum. And we have to be careful not to run at the new shiny object that Congress created or the tax code created. So Trump accounts may be new and they may be getting a lot of buzz right now, but you've got to pay attention to overall financial planning. We got to understand the rules. You need to take advantage of opportunities that benefit you or your kids or grandkids, but you've got to take a look at the overall picture in the bigger context. That's the biggest thing when it comes to something like that. Because it isn't a question as simply, is this a good idea or should we open one? It's a question of how does this all work together for your family and their future and their goal. And that can be two very different things. So once again, thanks for stopping by. My name's Brie Reyes. This is Estes Financial Services, and this has been another episode of Beverages with Brie. So thanks so much, guys. Go out and lead an abundant life. And please cool off with a nice beverage because it is hot, hot, hot in this Texas sun. I'll talk with you all later. Bye.